Thank you for joining us today in our conversation on economic development and the impact that infrastructure has. We're joined today by Samwel Ndandala, who will be taking us through this topic.
Thank you, Mary. I think infrastructure development is immensely critical to Tanzania's economic development. We've seen some significant investments over the last 5 years in infrastructure development in Tanzania. A notable one is the SGR, Standard Gauge Railway, which in 2024 alone transported over 1.4 million people, cutting the time by more than half the time that we would typically spend on a bus from Dar es Salaam to Dodoma. It's now about 3 hours 49 minutes. We've also seen other developments such as the Julius Nyerere hydroelectric power project, which is completed. Over 2,000 megawatts of power supplied to more than 60 million Tanzanians. What does this mean? It means these achievements could make Tanzania a logistical hub for the country. It would mean that we could be energy exporting, an energy exporting economy. It could mean that goods, people, capital flows a lot faster, and that catalyzes economic development. So this development don't just serve the domestic market; they make Tanzania a strategic gateway location around not just the landlocked countries, but also our neighbors in the region. So I would expect that there's an increased focus again in infrastructure development to facilitate the growth of our economy.
So Vision 2050 sets out an ambitious goal to have a $1 trillion economy and a per capita income of USD 7,000 by 2050. For the success of this milestone, the policy identifies public-private partnerships as crucial. The strategy is to leverage government leadership, private sector innovation, civil society engagement, and citizen participation. Cost for project preparation is normally not less than 2% of project's costs. So if the government plans to achieve the 334 trillion investments under alternative financing, then it has to allocate 2% of the 334 trillion in at least the first 3 years of the 5-year development plan.
So that's correct, Mary. So very few things to wrap up here. One is we have some very ambitious targets. Two is that those targets are not going to be met by public financing alone. We need the private sector to come in as PPP partners. The government is encouraging the private sector to bring in just about 70% of the funding needs that we require in this period of Vision 20 timeline. And for that, we need some serious investment into the readiness of these projects. As you say, 2% of 334 trillion is quite a lot. But what we need to see happen is the government allocating significant amounts of funding to have these PPP projects studied. We have feasibility studies, we have bankability studies, so that when the private sector comes in, these projects are ready to take off. So in the beginning of this Vision 2050 execution, the expectation, and particularly within this budget, the expectation is that PPP is given its rightful weight in the allocation of funding, so that we see more private sector involvement in these development projects.